Hey everybody, welcome to Trading Capital's exclusive analysis. In today's video, we're going to be discussing a lot of the market segments that are important over the next up and coming days, especially since we're heading into the CPI. So what has transpired today was an overall net positive day for the markets. The markets were led by the small caps. The S&P finished up 0.25%, as seen here on the daily chart. If you look at the QQQ, the mega cap 100, they're only finished up 0.03. So definitely a lot of weakness in the mega cap tech and primarily only the 6 large companies. But then you look at the IWM, it ripped today up 1.71%, potentially on watch for a breakout of this massive wedge pattern that we have been watching for quite some time. So short term, that is a positive for small caps. And are we going to see the breadth in the market continue? That is the big question. But when you look at the selling that took place today, I'm just going to bring up my mega cap watch list here. You can see Apple, Microsoft, Amazon, Google, Nvidia, Tesla, the 6 largest companies in the stock market all sold off today, while pretty much the rest of the market rallied. And what specifically rallied today was if we look at the sectors, you can clearly see that industrial were the big winner, 1.42%. Actually, if you pull up XLI, it is on watch now for a technical breakout. It arguably confirmed on the daily chart today by getting a beautiful, beautiful daily close around the 107.71 level and actually up in the after hours just a tad more. So you got a bullish daily close above this previous pivot high, and now the big question is, are we going to make a new all-time high here in the overall XLI trend? That's the big question. That's going to be the next level, but right now stands to suggest that people are moving more defensively into the industrial sector out of mega cap tech. You also saw staples down, utilities down, communications down, and the rest of the market was positive. XLE, financials, XLK, which is tech, and surprisingly XLK was positive despite some of the bigger mega cap names like Microsoft and Apple being down on the session. But if we scroll through some of these mega caps, Apple just hit support, daily chart support on the 20 moving average over here. You can see it got a nice little bounce. The chart is still overbought technically, but you are at support, so you're going to have to really pay attention to what Apple does here, because so too goes the market. If Apple goes higher, likely the market does. If Apple goes lower, likely the market goes. And then you look at Microsoft, the second biggest company. This is what's concerning me as a technical trader right now. You can see that Microsoft is teetering on the precipice of triggering this head and shoulders on the daily chart. Left shoulder, head, right shoulder. The downside target of this pattern, if it triggers, and today it actually did trigger technically speaking, but you really want to see if it gets another bearish close below that level. If it closes back above, the pattern is negated and you should favor more upside continuation. But the downside trigger of this pattern takes us all the way to 306. And again, Microsoft is the second largest company in the stock market, carrying a heavy, heavy weighting in the XLK, as well as the IWV and some other indices. Looking at Google, Google's weak, breaking the 50 moving average. You have Amazon also closing below the 20 moving average. You had the semiconductor strong today. SMH was strong, therefore Nvidia was strong, even though it did finish negative on the session. Also on watch for a potential head and shoulders that has not triggered yet, so we just have to be mindful that until that does happen, this could still chop sideways and head to the high end of the range and arguably fill this gap. We will have to wait and see, but nonetheless, Nvidia is overbought at this point in time. Meta was the standout stock today, had a big dip down, went negative, and then pretty much closed near the highs of the session, closing up 1.23%. That's on the back of Threads catching momentum, being the fastest social media app that's gained over 100 million users in a very, very short span, even beating out ChatGPT's user sign-up growth rate. So it's certainly impressive, but when you factor in that they have billions of people through Meta and Instagram, they should be able to capture and make new records, since they are the largest user base of platform social media in the world. So you would factor a conversion rate should be likely, and if it isn't, that's a little bit of a red flag. All right, let's move along. The dollar got absolutely smoked today. It tried going positive early in the session and reversed. The dollar looks like it wants to head down to this 100.84 level. But again, anything can transpire when we have the CPI. If the CPI comes in hotter than expected on Wednesday, then that certainly lines up for a pretty sharp reversal to the upside. Obviously today, one of the reasons why small caps rallied so hard substantially is because yields had a sharp pullback. You had the short-term 2-year yield down quite substantially on the session, 1.78%. You also had the long end yields. Let's take a look at TLT, which is the bond play, the inverse bond play of the 20-year yield. TLT is hitting support. You can see at this down or this lower boundary range over here, so it does favor a technical bounce. If TLT bounces, that means that the 20-year yield should see some, let me just retype that in. The 20-year yield should see some downside, some weakness. Now, overall, the picture on the yield market is likely going to continue to have more upside. I still think that if this consolidates sideways, you can actually make another leg up to about 4.5 on the 20-year yield. But you have had a pretty decent extension move, and you want to see this pattern consolidate if you're bullish on yields to go higher. Right now, yields are still in a technical uptrend. You're above the daily chart moving averages as well as the weekly, so you have to respect that at this point in time. This long wick never actually happened. That was your fake intraday print that transpired, and you can see that we pretty much hit that level to a T just on Friday. So, or sorry, just at the high of today's session before yields reversed. But right now, nothing wrong with yields. They do favor a continuation to the upside. What I found interesting today's price action, the dollar. The dollar was weak, so was oil. Oil had a down day despite the dollar having a big drop. Gold also was flat today, although it did finish off of the lows. It still closed flat in the session despite dollar and the yields down. So what that's telling me is that people aren't fleeing to safety. People are feeling a little bit more confident in this market, being the fact that they're getting exposure to small caps, growth, and tech. If you look at the regional banks, they're starting to put in an interesting pattern here, potential inverse head and shoulders. You've had a beautiful retest off of this neckline breakout, and now you're trying to put in almost this higher low W type of bottom. So watch the banks closely, because if the banks start to rally, there might be some interesting setups there on the long side, but certainly a lot of risk when you factor in net interest margins and where rates are technically speaking as of now. You know, we saw the 2-year yield hit over 5%, made a new all-time high, and what's to suggest that it can't go even higher than that if inflation starts to pick up? So it's going to be interesting to see how things progress. If we look at natural gas right now had a beautiful bounce, holding that 50 daily moving average. It still has a technical breakout above this key trend line. You can see it dip down on Friday, and you've gapped up today on the session. A lot of people are shorting natural gas based off of this intraday head and shoulders pattern. If you look on the 4-hour chart, you can clearly see you broke the neckline. Arguably, a lot of the times the pattern wants to retrace. If you get rejected, then it becomes a short. If you get a close above, then you arguably will test the range high around 292. My perspective, I still remain very bullish on natural gas. This is a daily and intraday pattern. If you look at the weekly chart pattern, nothing wrong with the weekly chart pattern. This is almost an inverse head and shoulders pattern itself. You have a left shoulder, you have your head, you have your right shoulder over here, you have neckline, you've broken out. You haven't confirmed on the weekly chart, but you have broken out, and you've now consolidating above the key neckline area. So right now, the weekly, the monthly chart pattern is okay. The daily chart pattern is holding up fine, but it does suggest that there is a little bit of vulnerability if that intraday head and shoulders pattern plays out. But full disclosure, I mean, when you look at the nat gas stocks, they responded well. The market wasn't that strong today, but AR was up. You look at EQT, some of the energy complex did really well. So things are responding well. I mean, UNG right now, if I look at this on a technical picture, and you always want to use the underlying commodity natural gas, but UNG is actually shaping up for a nice potential move to the high side of this channel, piercing the $8 level. There's a big technical gap where you had a breakdown around this 830 level over here, so I do think it's very likely that UNG could see some upside in the near term. Crypto was a standout winner today. I think Bitcoin is rallying today because of the dollar's weakness. BTC had a pretty impeccable move off of the lows. You saw the likes of Mara, Coin, all making some pretty decent runs when some of them went negative early on. Right now, Bitcoin's at a decisive point. It is putting in bullish consolidation, but it needs to make a move fast. This is arguably probably going to make a move off of CPI day. Now, based off of this technical pattern, the probabilities do say more upside. However, when you tried breaking out from this hammer candle over here, you actually made a new little high in the Bitcoin cycle over here, and it reversed with a bearish engulfing candle that reversed pretty much 3 hard days of price action and arguably a lot of chop in between here. So just be mindful that although this is bullish, in the very short term, you have a very heavy reversal off of that key level. When you factor in that this pattern has been consolidating for a couple weeks now, and the dollar has actually fallen in the last couple weeks tremendously, you would have, or at least I would have expected maybe a bigger breakout or move to the upside in Bitcoin, considering that Bitcoin has had meaningful consolidation and the dollar's actually lower. It just hasn't found that right footing as of yet. Let me just see if there's anything else I can touch base on as I scroll through here. Looking through some of the insider trades, there's nothing too crazy that I'm noticing off of the top of the screen right now. I'm just scrolling through some of the list, and there wasn't that many sells right now. So Wednesday's the big day. We have a little bit of data tomorrow, but it shouldn't be market moving. The big question is, are people going to de-risk? Watch the VIX tomorrow if people were buying downside protection ahead of the CPI. That's going to be imperative to see. And notice how the VIX is still off of the lows. It did finish positive today, despite the markets also finishing positive. So what this is telling us is that there is protection on the downside being bought. And from experience, the VIX does have a tendency to get out of control to the upside and to the downside, and certainly been bludgeoned to the downside as of late. But right now you have to respect that it is off of the lows, trying to put in a sideways pattern underneath a key 50 daily moving average, and the big question is, can it get above that level? And the bigger level is, can it get back above this main trend that it kept for quite a long time, really since 2017. That's the big level I'm watching. We got rejected once, but we haven't been sent back down to the low end of the range. Will we do another retest and get a daily and weekly close above this key white trend line? That's what I'm watching for. If you get a close above the 17 on the VIX, then the markets could see a big heavy sell-off in the near term. On that note, I'm going to sum up this video here. Definitely pay attention to Wednesday, and definitely tomorrow's close is going to be more important than the open, because it's going to give us a little bit of an insight as to how investors are positioned. Overall consensus is for inflation to come much more down, and certainly when you look at the core CPI, I'm going to be interested to see if other aspects of inflation are coming down, or if it's just the skewed year-over-year number from the energy complex that is really causing the CPI headline number to come down. I'm going to be looking at food, shelter components, and obviously the services side as well, and that's going to give us a clearer picture as to how sticky this inflation is and whether or not the Fed needs to remain a little bit more hawkish, or if they can slowly start to peel back and become more dovish. On that note, thank you everybody. Please give this video a big like down below, and we'll see you on the charts tomorrow.